Sorry, I'm working on it. We go live and enjoy ourselves live. Because we are going live, so I have to watch some things that we say online. Good afternoon, everyone. So our class today will be moving to group 2. But before we move to group 2, we need to consider what we have done in the group 1. And I believe you guys done some of your revision on what we've done in group 1. So for this is Riskfree Tutor and ICANN Tuition House, where you can get the best. And the class we're having now is for group account 2 for the intensive class. So let's quickly move ahead. For the class today, we are reviewing what we have done in the last class. And what we did in the last class is something that I want us to know that is very easy for us to do. And what we are doing is something that we can easily get our answers and then move on. So let's start with the revision. We ended last class with the 5 steps that we need in order to compute, in order to prepare the consolidated statement of financial position. Step 1, we look at the group structure. Step 2, determination of the net asset of subsidiary. Step 3, determination of group goodwill, or we get what we call gain or bargain purchase. Then step 4, determination of non-controlling interest. Then step 5, we look at the group retained earning. We said that these 5 steps are the steps that are required when we need to prepare the group account. Now, looking at the steps from their fundamentals, we looked at this question last week using Modupe, and we were informed that any question being given to us always have 3 categories. We have the preamble, the body of the question, and then the additional information. What are the information therein? We could see them from the holding, because reading the question, you'll be able to know which of the company is an holding company, which is the parent, and which is the subsidiary, taking into consideration the percentage holding. Then we also said in the body of the question, you'll be able to know what is the cost of investment, then what are the units of shares, and then what is the amount to be paid by the non-controlling interest. All these we look into, and then we pick the group structure as an item. We said from the group structure, it will help us to know the parent. Now, there's no specific way of drawing the group structure. It's just a sketch or what we call a kind of structural position of the group. We could see the parent, but what we must have in all the components, either you draw it vertically, horizontally, diagonally, the following informations you have there as follows. The group structure must be able to show us who is the parent, the subsidiary, the percentage holding, and the date of acquisition. Furthermore, you'll be able to also ascertain the NCI. Now, things that we need to put into perspective is how do we know the percentage holding? I told you there are some situations that the examiner will not provide you the percentage holding, you have to calculate. But before I move ahead, I said there's what we call a date factor. With this date factor, the date of acquisition and the date of reporting has a lot of things in common, or relationship, because if the date of acquisition and date of reporting is not carefully looked into, you might make some mistakes, because the examiner might need you to look at some fundamentals, and those fundamentals as follows. 1, what is the date of acquisition relationship with the reporting date, which I told you that the reporting date could also be referred to as well date of consolidation. The date of acquisition, if the duration between date of acquisition and date of consolidation, date of reporting is more than 12 months, you are talking about acquisition many years ago. But the duration between the month of date of acquisition to date of consolidation is exactly 12 months, then you are talking about acquisition at the beginning of the year. If the duration on the date of acquisition to date of consolidation is less than 12 months, then you are talking about acquisition less than 12 months. And that is called acquisition during the year, which we are going to say some fundamentals. Then the next thing we also look at is that we looked at this example in which we could establish the position of the date and then the situation of their acquisition. After that, we also look at how to calculate the percentage holding, which we look at in terms of units acquired and the total units of subsidiaries. We look at all these examples, then we'll move to the position of the step 2, which is the net asset of subsidiary. And I told you on the net asset of subsidiary, what we need to understand is how to determine the post-acquisition reserve. And while we're doing this, I said there are many adjustments that we're going to make when we are preparing this account, but we are not looking at those adjustments today because we are going to focus on the element of goodwill. And that element of goodwill, which I want us to focus on as we get there, is the element of consideration transfer. Because please, for your exam, no examiner will give you on the platter of gold the consideration transfer or the purchase consideration paid by the parents or the NCI. So that is going to be our focus today. And I pray by His grace, if we can finish this, then we'll now go to all the adjustments. So once we finish this one and then we move to all the adjustments, then we can say we have arrived for group account. Then we also looked at this in the last class, looking at what we call how to determine the goodwill. And I told you that these are the past questions. You can see there are sometimes the examiner will provide you with information in terms of what are the information that you need to know in terms of the purchase consideration and the NCI. So please don't be carried away thinking that your exam will always be a big question. You might have short ones like this and will be 5 marks. So we looked at this last week and then we determined the goodwill. Having looked at this, we also look at the situation of NCI. We said the NCI value to be consolidated comprises of NCI consideration amount, the post-acquisition of subsidiary attributable to NCI, then if there's any adjustment attached to that. So we've been able to look at that. We also look at the step 5, and I think at the end of the day, we also looked at the question that we gave ourselves, Modupe in Ojo, and successfully we could complete this question, and we look at all the steps, and I gave you an assignment. And for that assignment, I want to apologize that some of us did not have the material, but we moved on. So what I'll do is that today we'll go on with the other side of the divide, and then we move at a very fast pace. So that is that. Any question for me? Benedict, I think I've been able to do justice to the revision. Benedict?
Yes, sir.
Okay.
Yeah, I can hear you. Thank you, sir.
Okay, so let's move on. Laide, are you also with me? Yemisi and Yetunde, I think somebody is no more with us. Where is Taiwo? We are still looking for Taiwo and Modupe. Okay, Taiwo is here. Okay, Laide, you're welcome. Okay, everybody, let's just look at what we are moving. In the last class, I told you that under the step 3, that under that step 3, I told you that there are some situations in which the examiner, when we are calculating step 3, we are looking at the purchase consideration of parent and SCI. Please, I want you to know for your exam, don't be carried away. No examiner for your level of skill will give you the value of the parent purchase consideration on the platter of gold. You will need to ascertain the value and calculate that amount. So let's start with that. So for today, which is our group part 2, we are starting with what we call computation. Please, I won't want us to have this issue. I'm trying to make sure my handwriting is increasing. It is not. Let me know. Where's Modupe, my stenographer, checking on my handwriting? Please make sure that she's with me. So we have computation of purchase consideration. So what happens if you are given a question and you are not provided with the purchase consideration of the owners or the investors? You need not to fret. We need to just look at this. When we are talking about those that are the investor for a subsidiary, there are two major investors that we are looking at here. We are looking at the one that is categorized as parent, or we look at him as the holding entity, and the other one that is referred to as the non-controlling interest, the non-controlling work class interest. Now, when we are talking about acquisition of another entity, the parent company and the NCI must acquire these things with their resources. Are we together now? Now, for them to have these resources, there are some of them that have the resources hand on, but there are sometimes that they don't have the resources, that they have to get the resources. So what are those various resources in which the parent company needs to use to acquire the subsidiary? One, you can acquire the subsidiary by paying cash. We talk about cash payment. That is the first resources that you can apply. Number two, the parent company can also decide to acquire the subsidiary by means of what we call share exchange. Are you there, class? Share exchange. Whereby the parent will tell all those people who are the owners of the subsidiary that, okay, if you guys still want to be part owner of this company, I want you to take my own shares, and there will be an exchange. Maybe for every 10 that they have, the subsidiary, the parents will give them 2 of his own. That is number two. Number three, you can also talk about a situation whereby the parent company can also have what we call issue of debt. That means the parent company will decide to go to the debt market and go and buy loan, to go and apply for loan in order for that company to be eased. Then there's another method we refer to it as what we call deferred consideration. Deferred consideration, meaning that it will enter into a contractual agreement with the owners of the subsidiary. Are you there now? Saying that, okay, in order to acquire this subsidiary, the payment will be made in future. So those are what we refer to as the resources. There's another resources that we look at that is referred to as what we call contingent consideration. Contingent consideration. Contingent consideration is talking about a situation whereby the parent company agrees on a particular time that the consideration to be paid for the subsidiary will be made in future based on certain conditions. Based on certain conditions. So those are the things. So let me bring it out in a very clear picture, and which we'll see. But before I move on, let me also just talk about the one that has to do with the NCI. For NCI, NCI too can decide to pay off by what we call issue of shares valuation. So for what we have seen now, that you won't have it on the platter of gold that the value for buying this subsidiary will just be given, but there are things that you might need to work them out. So let's take them as we are. So let's look at components. I will call it components of purchase consideration payable by parents. So let's list them out. Number one, what's the first one that we talked about? cash payment. Number 2, what do we talk about, class? Share
Share
exchange.
exchange.
Number 3, we talk about what, class? Deferred consideration. Number 4, we talk about what, class? Issue or debt. Then number 5, we talk about what we call contingent consideration. Contingent what, class? Consideration. So can I pick that one by one and then we'll run with it? So let's move. Number 1, let's take the first one. The component of PC. So we are looking at the one that is called cash payment. For cash payment, we don't have much thinking to do. It's very simple. We just say that the cash payment represents the total cash settlement made by the investor. Made by the what? Investor. QED. There's no wahala. Now, what we now need to note is we now have to ask ourselves the treatment. And there are basically 2 treatments you have to say that we have to note is that 1, recognize already, not recognize. Now, what am I talking about? And what do we need to understand about this recognition or not? If you are given a question and you are told that there is a payment for the subsidiary and is recognized, when I say recognized already, the value is stated in the statement. The value is stated in the statement of financial position. That means in your question already, you are going to see that there will be a column there that they will say investment in the subsidiary, and they'll tell you cash. How will I now know that it is not yet recognized? How will I know that this value is not yet recognized? The transaction will be stated in the additional information. Will be stated in the additional what? Information. So class, how do you know if a cash payment has been recognized? The amount to be stated in the statement of financial position. How will I know that such amount is not recognized yet? The transaction will be stated in the additional information. So do we get that now?
Yes,
Now
sir.
the question is now, if the amount is already stated in the statement of financial position, what do? You don't do anything. You just pick the value and then you recognize it in the statement of profit or loss. In the
Financial
computation of
position.
the goodwill. You just pick the value and you take it to your goodwill computation. But what happened if you now see that the value have not been recognized? That means in the statement of financial position. So that is now where we have to focus now. Treatment of cash payment not recognized. And how do we know it's not yet recognized, class? It means that that value is not stated in the statement of profit or loss. In the statement of financial position. Are we there now? So what will now be the treatment I have to do? Because the cash payment has not been shown. So I will now have to make sure that it goes through the journal entry. You debit what called the investment in subsidiary and credit the cash or bank of of the parent. Are we getting that now? Which simply means that by the time I want to consolidate, the amount of the cash that is paid for the subsidiary holdings must be deducted from the consolidated cash of the parent. Do we get that, please? That is for cash. Thank you. Implication, and I want you to note that. The implication of this is that the cash payment made must be deducted from the parent cash stroke bank balance. So that is that. Any question? Okay. Let's move to the next one. We have done the cash payment. What is the next one that we have? Component 2. We are looking at the second component. Please, what was the second component that I mentioned?
Share exchange.
Now, if you talk about share exchange, what we are looking at under this procedure is that we are looking at a parent company that is saying, I want to acquire the subsidiary, and is exchanging his shares, is giving out his own shares. Are you there now? In return for the holdings in the subsidiary. Are you getting what I'm saying? Now, how do we determine this? And that is what has always been the issue that students get to have problem with. How will I determine how much? So there are steps to this. So what are the steps you have to do? 1, determine the value of share to be exchanged. Determine the value of the share to be exchanged. How do I determine the value of the shares to be exchanged? And that is now where we will get to pay more attention. And this is how you determine that. Please, I beg you, and please, and please, and please, don't rush into it. Once you rush into this one, there's what we call you rush in and you rush out. Because once you don't get those process, you cannot get the value that we need to look at. Now, the first question I'll first have to ask you is that, what is the shares I'm buying? What are the units of shares that I'm buying? What are the process of the shares that you are buying? And those are the things you have to look at. So please, once question is given on share exchange, I always tell my students, the first question you have to yourself, what is the value of the share? And what are the units of shares that are involved? Before we start talking about accounts, and people will make mistake of saying, what do I do? And this is what you need to do. So please, when I give you a question on this, because I'm trying to look at some questions that I've been giving other students, because when I'm through with this, I want to let you know what we have. So this is how to get the value. And the procedures are this. We say offer of shares by investor divided by basis of shares. Are we there now? Of investee times market value of the investor. And please, when I'm talking about the investor here, I'm talking about the parent. Then times what we call units of shares acquired. Get that, class? What is the formula, please? Read the formula out for me, everyone.
Offer of
Offer
shares
of
by
shares by
investor
investor
divided by
divided by
basis
basis
of
of
share
shares
of investee
of invest
All
times
over
market
basis of shares
value.
times
of what?
market
Unit
value
of shares.
Investee.
Yes.
Basis of share of investee
Mhm.
times
times
market value
value
of
of
investor
investor,
Okay.
which is the
times unit
parent.
of shares account.
Now let me explain it one by one, then I'll give you a scenario. Offer of share by investor. That is what the investor is saying I will give. Because look at this, it's like the investor, which is the parent, does not have money to buy the company. So he's not going to give you his shares. So he will tell you that I will give you 2 units of my share based on your own numbers of shares. That's why he's now having it as base of shares of investee. That means you can come in these ways, and which you have seen in bank. If you look at what happened under the scenario or what we are having in the other instances, are we there now? We are saying that issues can have that company wants to buy another entity. When you are buying another entity, what you are simply saying is that you are telling that other entity that how many units of shares do you have? For every 10, you are telling those shareholders that for every 10 of units of shares you have, I will give you 2 of my own. So please understand very well. There is no cramming of this, because I've seen some people in some textbooks, they'll just tell you, they will first tell you that of the parent, that for every 2 of the parents, 10 of, please, the examiner can go in any way. So what you have to ask yourself is, how many units is the parent offering the investor in exchange of how many that the subsidiary is giving? Do we get that now? Yeah, so those are the things that you have to ask yourself. Are we getting that now? Now, the question will now be market value of who? Because the parent company cannot give you his shares at the nominal value. It's going to give you his shares at the market value. And that market value is the amount that you are going to buy that share at the floor of the stock exchange. Right there now. And the basis of what is coming to you is based on the unit of shares they have acquired. So please note very well, there are some instances that the examiner will not give you the unit of share that he has acquired. He will give you the percentage that he has acquired. So in that case, you might have to do what called percentage holding times the total units of subsidiary. Are we getting that now? So please, what we need here is what we call the total unit of shares acquired. Any question? Any question?
Excuse me, sir.
Sorry, that last one. Sorry, sir. Percentage holding times total unit of what?
Of shares of the subsidiary.
Okay.
You know, because there are sometimes they will
Excuse
just tell you that parent acquired 80% of the subsidiary, and he has to give 2 for every 10. The question now will be how many units of shares, because the formula we are looking at here, when we are dealing with shares, anytime we are dealing with shares, we don't deal with value, we are dealing with the unit of shares. So you have to make sure that you convert that percentage of acquisition to unit of shares. And how can you get that? Is by looking at the unit of what the subsidiary owns times the percentage that he has acquired. Any
Hello,
question?
sir.
Yes, please.
Excuse me.
Lady.
So you are saying the unit of shares acquired had to be the unit that the parent company is interested in the subsidiary.
God bless you, lady. That is it.
Okay.
Not
Okay.
the entire unit of shares.
Not the entire, just the portion the parent
Yes,
is
the portion.
interested in. Okay.
Yes.
Okay.
Why do we have to do that? Because the residual portion belongs to the NCI. And that's what the NCI will use to base its own valuation when we get there. So do you get that now, please? Are you there? Okay, that is the step 1. Step 2, haven't you gotten the value of this? The next thing that you have to do, which is step 2, is what we call accounting for the exchange shares. I want to quickly ask you this. If you look at what we have done in that first part, we have the value. That value, let's call it X, Y, Z. This value that I'm talking about, class, is a market value. Meaning that market value is comprising of two things.
Water, please.
And because if I need to do the
Water,
accounting,
please.
I'm going to debit. I'm going to debit what we call investments in the subsidiary. That is the debit entry. But what will I have to credit? I have to now tell you that there's an implication, because for the parent company to have what done share exchange, the share capital will increase. So class, what is the implication of share exchange for the parent? What is the share exchange implication? Is that the share capital of the parent will increase. Having paid whatever is for the subsidiary, the share value will increase. And because the share value is going to increase, two things will happen. The share capital will increase given the nominal value, and whatever is the difference, which is the market value. Remember those days in your university days or even our foundation, that extra amount is called share premium, and that will increase. And please know that these two items will be related to the parent's account, because once the parent issue additional share, it means that the value of the shares in terms of unit will increase. And whatever he has issued, because he has issued the share at a value greater than the nominal value, it means that there will be a share premium. Modupe, you are welcome. Modupe Kabo.
Good afternoon. Good evening. Thank you.
Okay. So what we have done, we are just starting. I'll just do some recap a little bit. Are you there now?
Okay.
So that is all we have in class. Now, class, I haven't looked at all these scenarios because of Modupe. And you know, I will always have that point for Modupe. If Modupe is not around, I will not concentrate. Okay, Modupe, we started by saying, I'm just a bit recap, is that we are saying that when we moved in the last class, we will always have the situation that the investment cost or the investment amount paid for the subsidiary will be given. And I said in the exam, nobody will provide this for you. You will need to calculate it. And there are procedures in which you use to calculate them. And these are the components. We said we can have what we call cash payment. We can have what we call share exchange. We can also have what we call deferred consideration. We can also have what we call issue of debt and contingent consideration. So we consider the first one, which was cash. We said the cash payment can be treated given the two scenarios: already recognized or not recognized. How do we know it's already recognized? Is that such value would be included in our statement of financial position. But how do we know that it's not yet recognized? The value will not be stated in our statement of financial position. It will be stated in our additional information. And that's our focus. If it's not stated in the statement of financial position, that means it's not recognized. So we have to go through the double entry principle. Debit the investment in subsidiary and credit the cash or bank of the parent, which simply means that the implication is that the cash payment made will be deducted from the parent cash or bank balance, because the parents will have to pay that amount. Next, we now say that the second component is the share exchange. And this is what we always have, that in order for the parent to get the holdings of the subsidiary, he needs to issue his own share. That means this is a person that does not have money. We now say there are steps that we need to follow. See, number one is that we need to determine the value of shares to be exchanged. And for us to determine the value of shares to be exchanged, I designed this formula. Although I can say it with all pride that it's not in any textbook, is that we have what we call offer of shares by investor divided by the basis of shares of investee. That means the investor is telling you, this is the unit of shares I'm giving you. And in exchange, your own basis point of shares. So for example, I can say for every 2 of the parents, you'll be exchanging it for that of the subsidiary. Are we there now? So that is what we have. That's what we have. Okay.
I cannot
For
see your handwriting. Oh. I want to get the printer.
okay, I've really missed that your part. So that is why I'm saying it now. Let me explain it again. Offer of shares. Can you see that? Offer of shares by investor divided by basis of shares of the investee. Are we there now? Times market value of the investor. Then times unit of shares acquired. Did you get that now? So we now
Please.
said, and I said that with this, note very well that what we are dealing with is the unit of shares, please. But in your exam, the examiner might decide to give you what we call the basis point of percentage. Please, the person who is recording, you are going to really give me a lot of money to be paid because my cloud is being paid for. So I cannot record because when you are recording, you are making all of us to record. So please let that person not record. I'll put it on YouTube because if you click record, you will also be making all of us that are co-hosts to be recording. It's automatical. It's something that is automatic. And when you do that, my cloud, I have a gigabyte that I've done. That means you'll be extending my gigabyte. Thank you very much. So let's go on. So please, you can easily watch it on YouTube. And when you watch on YouTube, there's no tag on it, so you can download it. So let's move on. Now, the next thing we now need to look at, and again, I've sent the YouTube link to your chat for some of you that said you're having network problem, which you can watch later. So we now said, I haven't gotten that. If you are not given the units, you might have to work with the percentage holdings. And then we now have that. So I now said, we'll move on. Step 2 is now we need to account for the share exchange. Because the parents have issued more shares, so you have to account for the shares that the parents have issued. And the thing that you have to do is that one, you have to know that that share was issued at market value. I haven't gotten that the total amount of those shares was actually employed in order to get the needed fund or resources for the investment in subsidiary. You debit the investment in subsidiary. Then you credit the share capital of the parent because there's an implication on this. Once the parent company issues share or do what we call share exchange, we are simply saying that the unit of shares, value of shares, please, of the parent company will increase and the share premium will increase because the share have been issued above the nominal value. That is the step 2. Now there's a step 3 to it, which a lot of people shy away from. And I always tell my students to pay attention is what we call the issuance cost. There are some situations in whereby the shares will be issued and there will be an issuance cost. Please, according to the standard, the issuance cost should be adjusted with the share premium. So we say the cost of issuing the share should be adjusted with share premium. And this is what the rule says. When you paid for that amount, you deduct it from your bank account because the amount has been paid, but you are going to debit your share premium. Please, issuance cost is not an expenses operating. It is a capital form of expenses. So that is why we are going to deduct it from our share premium. So I will just put it there that note that issuance cost. Modupe. Issuance cost is capital expenses. I would like to put it in that way. Therefore, adjust or written off to share premium. That is that. So we are through with the second component. Any question? Any question for me, class? If there's no question, I have an example for you, and I want you to tell me what will be the answer. So can I give you an example? Your own classwork, or I'll solve one, then I'll give you another one as classwork. So let's have this. I've said on any question on 1 May 2016. Let me just say 1 May
Please,
2018.
this writing is very small.
Okay, I'm not saying it. On 1 May 2018. How about now? 1 May 2018. Are you there? Taiwo acquired 80,000 units shares of Ojo. Are we there now? By way of exchange of shares of 2. Are we there now? Shares of Taiwo for every 3 of Ojo. Full stop. The market value of Taiwo shares is 5 naira per unit, and Ojo's is 2 naira per share. Full stop. The nominal value of Taiwo's share is 1 naira per share. So this is now your required. Sorry, it looks as if I'm signing, Abby. I have to be careful now. Required. Compute the investment cost payable by Taiwo and state the journal entry. Full stop. Modupe, can you read? Because I know if once you can read what I've written, everybody will see it.
Yeah, I was following you, so I speaking your words. I was writing like you.
Okay. Oh yeah, let's read together. So that on 1 May 2018, Taiwo acquired 80,000 unit shares of Ojo by share of exchange of shares. Are we there now? By exchange of shares of 2 shares of Taiwo for every 3 of Ojo. The market value of Taiwo's share is 5 naira per unit. Per unit, not units. Per unit. And Ojo's is 2 naira per share. So the nominal value of Taiwo share is 1 naira per share. So you are now asked, compute the investment cost payable by Taiwo. State the journal entry. Quick one, and you see so simple. Will it come out in the exam? And there's a yes. Solution. What's the first thing the examiner asks us to do? Computation of the investment cost. Now, a lot of you will say, Modeo, what have I written again? It's actually the way we are going to get that. So let's look at it. Go back to our formula that we have said. What was the formula that the examiner we have been dealing with? We said in order for us to get that amount, how do we get the amount? Offer of shares by investor divided by basis of share of investee times market value of investor times unit of shares acquired. So in that case, let's get our answer to be done. So class, I need your help. What is the unit of shares offered by the parents?
3 shares.
By way of share, 2 shares.
2 shares.
For every
2 of Ojo.
You are not clear. Laide, what is the answer?
It's 2 of Taiwo.
2 for every 3.
2 of Taiwo. In order to get how many of Ojo?
3.
So how many will Ojo shareholders offer in order to get Taiwo?
Ojo will share 3 for Taiwo's 2.
Okay. If that be the case, tell me what will be my answer? Will it be 2 all over 3 or 3 over 2?
2 over 3.
2 over 3.
So I'm going to have 2 all over 3 times
2 over 3.
Okay, times what is the market value? What is the market value that I will use? 5 naira.
5 naira. 5 naira.
Okay, 5 naira. Don't worry, don't be tired. Times what is the unit of shares that we are going to use? 80,000 units. So class, what will now be the answer of the shares that we are having? Sorry, the value of the investment cost. Ẹ jẹ́ fún mi calculator, ẹ jọ̀ọ́.
Market value is
I can't hear you.
266,000.
266,667.
266,000.
667.
Okay, 266,667. I agree.
Yeah.
Approximately.
267. So that is that. Correct. Everybody, you can see your shopping icon mark. So let's go to number 2. Number 2 now. We now want to do the journal entries. In order to do the journal entries, we need to be very careful. We need to know which one is on debit and which one is on the credit. To debit, that is our investment in subsidiary, because that is our investment element. How much is that? 266,667. But when we are going to take this account to the share capital of Taiwo, we are going to split it into 2. We are going to split it into the share capital and the share premium. Now, and I need your help. Be very careful. You don't need to cram. What is the total amount that is the share, that is the investment subsidiary? That is 266,667. Are you with me?
Yes.
What is the nominal value of the share of Taiwo?
1 naira per share.
The nominal value is 1 naira.
Times 1 naira divided by how much was the issue cost? Was the market value?
5 naira.
5 naira.
So multiply this with this, I'll be able to know what is the nominal value.
53,303.
Fún mi lánsà.
53,303.
53,303.
303. 333.
If I want to get the balance, you know, I can subtract. But let me give you another way. I'll just say 26667. What is the premium of this share? That is 4 naira out of 5 naira. So give me answer. The share will be equal to what we have there. Fún mi lánsà.
213,334.
213,334. So which means that is our big, are you there now? Investment cost in Ojo by issue of share exchange. Hold on. Is it difficult?
No.
Okay, you now have your own classwork now. Can I give you your own classwork? Oh, yeah.
You want to write?
You want to write? I
Yes,
thought you guys
sir.
have been instructing.
You want to write this one? You finished.
Okay. Oh, yeah, right. It's too short now, just too short. Are you true?
No.
Let's make it.
Excuse me, sir. You said being investment cost in Ojo what?
Being investment cost in Ojo by issue of share exchange.
Okay.
Okay, can I move on?
Yes.
Sharp. Okay, this is now your own classwork. Example. Let me see the name. Okay. Madam Laide, what's the name of Oga? Okay, Laide is not telling us the answer. Who is acquiring? Mrs. Laide, who acquired you or who did you acquire? Okay, let's take this example. Laide Co. acquired 75% of let's say of what? Omo Co. on 1 January of acquired 75% of Omo Co. on 1 January 2018.
I cannot see you.
I said Laide Co. acquired 75% of Omo Co. on 1 January 2018. Are you there now? Full stop. In order to complete the acquisition process, shares were exchanged. We are now told Omo Co shareholders submitted 5 units for every 3 shares of Laide. Stop. The market value of Laide is 2 naira 50 kobo. So we now have what we call the capital structure. So we have what we call share capital. Lide we have at 1 naira 50 kobo. Lide has at 1 naira 50 kobo. Each. That gives me 1 minute. Today I'm formulating the question. $250,000. Then we now have Omo Co at 1 naira each, and that is 100,000 naira. So class required 1. Compute the investment cost in Omo and journal. Yeah. So let's have it. This is exactly 6 o'clock. So you have 5 minutes.
Investment what?
Investment cost in Omo and journal.
Investment cost.
Yes, in Omo and the journal. You have 4 minutes more. Three minutes more. Like Yetunde Lukman. Please, who is Mr. Lukman Oladejo? Who is the Lukman? Mr. Lukman, are you there? Please, can you just let us see your video? Okay, ẹ sọ̀rọ̀. Okay, I think you are the only one. Okay, I've seen Modupe. Mr. Lukman, are you with me? Okay, sir. Oh yeah, ẹ solve question. Màá mọ̀ tẹ́ bá ń ṣiṣẹ́. Mr. Lukman, ẹ solve. Yeah, can we have the answer? Ejo, ẹ fún mi answer. You have 1 minute more. Hello, class. 1 minute more. Okay, 45 minutes, 45 seconds more. We have others to do, please. Who has finished? Okay, Taiwo Ojo, what is the answer? In case Taiwo, we might not be able to hear you, you can just put your answer under the
Sir.
chat box.
Okay,
What's the
sir.
answer?
Okay, sir. I got 150,000. I don't know if it's correct.
Okay, Taiwo got 150,000. Okay, how do you now do the journal? What's the share capital? What's the share premium?
Okay, I'm still on that. I'll get back.
Okay, I think I've done enough. So let's look at the solution. So looking at our solution, the first thing the examiner asks us to do is the computation of the investment cost. So to get the investment cost, what I need to do here is that how many units of shares is the parent offering? The parent is offering 3 units of shares. So he is saying for every 3, he's going to collect 5. Now, question next is that how much is his own issue of the is 2 naira 50 kobo. Now the question we are now having next here is that they didn't tell us the unit of shares, but they told us the percentage holding. Is buying 75% out of the total unit of shares owned by Omo. And Omo shares is 1 naira per share. So for me to get that, I'm now going to have 75% times 100,000 units of shares. So what will be my answer? 3 all over 5 times 2 naira 50 kobo, then times 75,000 units.
Hey, Babo. Yeah, it's
Oh yeah, what is the answer? I need you to use your calculator. Give me answer. Answer that.
112,500.
Yeah,
112.
112,500.
112,500.
112,500. So how many of you got that?
I put 5 over 3.
I didn't put the percentage holding. I didn't put the percent. I used the whole 1,000. Well, 100,000.
And Lide, you know, Lide, you were the one that
100,000.
pointed out to us that the proportion that the parent
Yes.
is interested in.
Is interested.
And that is your question.
Yes.
Okay, so can we look at the journal entry now? I think for the journal entries, you guys should be home and dry. Like my friend will say, you said you shouldn't say home and dry, home and cool. Investment is a cost. Sorry,
Yeah, boy.
investment is dry, not a
Boy,
cost.
everybody let it.
Somebody is asking question. Taiwo, what is the challenge?
No, I'm not the one. Oh.
Share capital
I
and
didn't ask
share.
question.
So for my share capital, now I'm going to have 112,500 times 1.50 divided by 2.50. Yeah, for the answer. Ẹjọ́, kí lẹ pé? Láìdé. Answer, please, class. You know, we are together.
7,500.
Pardon?
67,500. 67,500.
67,500.
500.
So what's now the share premium? Just give me the balance.
Yeah.
Price from 112,500. I give you 45,000. Yes or no?
Yes.
Hello.
Oh,
Okay,
no.
we are through with that. Let's go to the third component.
Please hold on. Oh.
As you hold on. Which one? Let me see what's the question, or who is asking question? Modupe, what do you want? Can we go to the third component, please?
Please, please, you have to go back to the chat.
Yes.
Yes, but please, I want us to go back to the previous page. I'm not taking down my journal entry.
Okay, Lukman, speak, please. I can see your hand. Lukman, what's your question? You are
I said I
signifying.
want to. Oh yes. Okay.
Pardon?
Excuse me, sir. I have a question.
You have no question.
Yes, yes.
Okay, who else?
Sir, I have a question.
Oh, yeah. Can we move to the next item, please? Are you through with that? Can I move to the third component?
Yes, sir.
Okay, the third component is called deferred consideration. Are you writing?
Okay.
Are you with me?
Yes,
Are
sir.
you
Yes,
with me?
sir.
Okay. Okay, we are writing deferred consideration. This is a situation or a process. This is a situation or a process where the parent has consideration to be paid in future. This is a situation or a process where the parent has the consideration to be paid in future.
To be what?
To be paid in future.
To defer.
I said, I
Again,
repeat,
Eddie.
this is a situation or a process where the parent, are you there? has the contractual has the contractual power or the consideration to be paid in future. Are we there now? I said this is a situation or a process where the parent has consideration to be paid in future, which will represent either a liability or an equity. Which will represent either a liability or an equity. Which will represent either a liability or an equity. Are we together? Now, when you are talking about deferred consideration, we are actually looking at a scenario whereby the obligation or the amount of what the parent is going to pay will be something that will be paid in future. You are telling somebody that I want to buy your company, and the scenario we are looking at here, we are saying consideration is paid. Are you there now? For in future. And I want you to underline that word. Is paid for in future. And that future is that is either is in form of liability or is in form of what? Equity. Now that will actually throw up something. Is that if you are telling somebody that I will be paying you in future, telling the guy that come, I'm going to be paying you in future, what now happen? What would that person have to do? Is that what would be the basis of measurement? If the amount, because how do you know this in the exam? The examiner will say that an amount will be paid in the next 3 years or in the next 4 years. Once you start hearing the word payment in next 3 years, in next 3 years or in future, or the word in future, you are referring to what we call deferred consideration. Then the measurement. How do we get the measurement? The standard says when payment is to be made in future, the fair value, are you there now, of the liability must initially be recognized at the present value. At the present value of cash flow. At the present value of cash flow. Do you get that now? And how do I determine the present value of cash flow? The rule is we are going to say computation. Yes, please, Modupe.
Yeah, please.
I said the payment in the next or future. I then said that when liability is the fair value of the liability must initially be recognized at present value. Do you get that? Must initially be recognized at fair value. Any question?
No problem.
Okay. So how do we now calculate the amount, which is the present value to be recognized? So for me to now recognize my present value, the present value is going to be what we call the agreed future amount payable times the discount factor, which is 1 plus r raised to power minus n. And that is how we recognize it. So that is the first thing we need to do, which is step 1. Any question? Oh yeah, Mumbo, any question? Do you have any question? So if there is no question, I will have to move on. So in that case, on that formula, let me just write it again. Computation of present value. So what do I have? We said the agreed value, future value times the discount factor. Please, N is what we call the number of years. While R is referred to as the discount factor rate. Are you there now? So that's what we have. Now that's always the first step we have to do. So what are the accounting entries that we need to do? We say one, we haven't determined that amount, we recognition of present value. And how do we recognize the present value? Let's say whatever amount you have gotten is AAA. So the rule will be debit the investment, debit the investment cost, debit the investment cost in subsidiary, that is the AAA. Then you now credit what we call deferred consideration. And please, this deferred consideration is going to your non-current liabilities. Non-current what? Liabilities. Now, number two, this deferred consideration is a form of liability. You must account for the finance cost. You account for the finance cost, and how do you get the finance cost? That will be the discount factor rate times the present value. And whatever is that one answer, you also have to record it. You debit finance cost.
There is a number 2.
I said finance cost.
Okay, finance cost.
The finance cost, please. And that finance cost sometimes also referred to as what called unwinding cost. This is too tiny. Let me use maybe black. We call it winding cost. And how do you get that? Debit the finance cost and credit what we call the deferred consideration too. So that is that. Any question? Lady, are you with me? Lady, do.
Yes, sir. Yes, I'm with you.
Okay. Let me see.
Yes, sir.
Okay. Haven't done that. I want to quickly move to the other one. Can I move on? Issue of debt. So let's go number 4. Issue of debt. When you are talking about issue of debt, you can have the parent company do what we call issue of debenture. They can decide to issue debenture in order to make money. You can also talk about issue of loan stock. So you can either issue that. When they issue debenture, what do? Thing 1, you recognize the debenture, the recognition. How do you recognize the debenture? Debit the investment cost in subsidiary and credit the debenture. The debenture will always have a percentage. That is it. Then he has number 2, because for every debt, there's always an associated cost. So if there's any debenture interest, you must account for the debenture interest. So that will be the interest times the debenture value. And when you get that value, the debenture and you get the value will now be accounted for as follows. Debit, what we call debenture interest.
So we cannot say interest. I cannot say rather. Interest and
I said issue of debenture, recognize the
value.
debenture, debit the investment cost in what? Subsidiary, then credit the X percentage of debenture account. This one will be inside your non-current liability. Are you there now? Non-current liability. Then you will account for the interest on it, because there must be an interest, and that is the statement of P&L expenses. So you get the debenture interest first, then you debit debenture interest account and credit either cash if it has been paid, or bank, or you say debenture interest due if it has not been paid. So that is for that. Same thing you do for loan stock, please.
Excuse me, sir.
Yes,
The
sir.
debenture interest that you said will be in statement of profit or loss. You said X percentage times debenture value equal to DD. What's the DD, sir?
DD is the debenture interest. Just saying the value of the debenture interest. Like when we write the word XX, saying that maybe 10% of 100,000 will give me 10,000. So that is what will be my value of debenture interest. So if it's loan stock too, you just replace where you have debenture interest and write loan stock. And you also calculate the interest of the loan stock. Any question?
Did
Hello,
you say something?
sir.
Can you say that
Yes.
again?
Taiwo, I'm listening.
Sir, how about preference share? Is it the same treatment with preference share?
No.
For loan stock.
Okay.
No. Preference shares. Be very careful. Are you using preference shares? Be very careful is that if you are buying the preference shares of another company, what you are just doing is that you just calculate maybe you paid more or you paid less, and that will just increase your goodwill. Are you there now? Any other question?
Okay.
But
Yes, because
if you are issuing preference shares,
but that's what I wanted to confirm.
okay. But if you are using preference shares for this company to go and buy, that is it. You are not telling them if you are using preference shares, it will still follow the way we have done our ordinary share. But that one, it might not be a case of share exchange. But in case there's also a share exchange of preference shares, please do it the way we did issue of shares. And dividend is not looked at as interchange in that one. No. Dividend will be looked as you are owing those people. Next question. So what is the last component that we have?
For loan stock, can we talk about the recognition, please?
For loan stock, it's still the same way that we do recognition of loan stock. You see the same way that we have done for this guy is also what we do for loan stock. So you just debit the investment in subsidiary and credit loan stock in P&L. Then number 2, we also do what we call loan stock interest. And the loan stock interest too, we just go to debit the interest, which will be a statement of P&L, and then you credit maybe cash if it has been paid or due if it has not been paid. So that is the same thing. Next. What's the last one we are looking at? Contingent consideration. And I've told you that the contingent consideration, in this one, you don't work or you don't calculate. This is just whereby consideration is based on future occurrence of an event. So we say consideration is based on future, are we there? Future, which grammar will I use now? Consideration is based on future events, which is usually uncertain. Which is usually uncertain. Right there now. And there are examples for that. Maybe you give example of what we call profit target. I'm telling the guy that if I'm going to pay this amount, you must reach this particular profit. Or I'm talking about what we call performance based, or maybe level of your production. So that's what we call contingent situation. Now, what I'm going to do is that I'm just going to give you a global view of what this thing will look like if you are given everything in the journal. So let's see how this will look like if you are given everything. I call it the overview. The overview of the investment in subsidiary. So let's see how the overview looks like. It's going to be like our journal entry. So we have the overview. Note everybody that we have the investment cost, which is always the everything. The investment cost in subsidiary. I have it there. So we now have all those components. You can list them one by one. Class, help me out. Can you give me all the list of those components one by one? See, number one, what do I have? Cash shaking you.
Cash payment.
And don't forget that cash payment is coming out from the account of that guy. What's the next one? The share.
Share exchange.
That shares, you are going to now divide it into share capital. Then we also have share shaking you, share premium. Next, what do I have, class? Deferred consideration. Okay, mom. Don't worry, mommy will soon finish. Then next, what do I have? Okay, is that your mission like it? Please just tell mommy will soon finish. So after that, we also have what we call issue of debt. I think I would like to use a specific word for the issue of debt. We can talk about the debenture. Then we can also talk about contingent, the contingent consideration. And all things being equal, the value must be the same. So that is a journal when we talk about the opening entry of any business. Any question for me, people?
Sir, I have a question.
Yes, question me.
Okay, my question is that the journal entries, that means when we are giving something like that in a question, that means if we are doing the journal entry, it will affect the account of the parent company. Like here now, like that share capital, it will increase the share cap. Sorry, the share premium. It will increase the share premium.
Yes, Taiwo. You can see why we are doing the journal entries, that all this will affect the value of the parent, and that's why I put the implication, because he's raising all these funds, and once he's raising them, it means he has not recognized them. And if you remember, the cash payment we are talking about here is the one not yet recognized. Are you there now? So all these values is showing you that they have not yet been accounted for.
I lost my connection. Can you recap, please?
I said that all what we are having here is the overview of all the transactions that we have done. Are we there now? All these
Sorry, I lost it
transactions.
hello, please. I lost my connection from contingent consideration when we started.
I said the consideration is based on future events, which is usually uncertain. And that uncertainty in terms of example is profit target, performance based, maybe level of production. So which you cannot determine. If you are going to be asked this question in the exam, the examiner would have given you the instances that he wants you to do it. Any question for me?
No.
Okay, you are going to have an assignment. But before I move on to your assignment, I have to do the last guy own. All what we have done now is all about parents. But we have to do that of the non-controlling interest. So let's get
This
computation.
overview. No, you cannot move ahead, please.
Which one?
Hello.
Yes.
I said I lost connection for contingent consideration. So it means that all that you said for contingent consideration, I did not get any. You just recapped the first page. The second one, you have not talked about it.
I said that the
This overview of investment.
Yeah, okay. I said this overview is just
No,
bringing everything that we have done into one instance. We are saying that all these values that you have here, from cash, capital, share premium, they all are added together to give us the value of the what? Of the investment cost in the subsidiary. Are you there now?
Okay.
So that's just what we have
Yes,
done.
I am.
Okay, so we now move to the
Then I
other
want
guy.
to don't forget, I
Pardon?
want to munch the page. I want to
You
do a
want to
screenshot
what?
of the page. I want to do a screenshot of this page. Can you take it back? All right, thank you. Done. Can go ahead.
Computation of NCI. Now, there are some situations that the NCI fair value, computation of NCI fair value consideration will not be provided. They will not tell us. How to get this one is very simple. We just talk about units owned, or I would say acquired by NCI times the market value of the subsidiary. The market value of the subsidiary. Simple. So how do you calculate the fair value of consideration of NCI? The unit owned or acquired by NCI times the market value of the who? Of the subsidiary. So let's take the example that we have done earlier, and you'll see that we'll be able to get that answer. Remember when we were solving this question? Let's go back to share exchange. When we're doing this share exchange, remember we said that Ojo bought how many units of shares? 80,000 units of shares, yes or no?
80,000.
And
Yes,
out of that 80,000 units of shares, in this question, we might not be able to do that because it does not give us the total unit of shares of the subsidiary. But let's go to the other one we did that was very interesting. Lide had 75% of shares of who?
Okay.
Of who? Of Omo. Are you there now? How many is the remaining shares that will belong to the NCI?
25%.
25.
If they are not told that the market, so let's now look at this. If they now decide to inform me that the market value of Omo share is 2 naira. Is how much, class? 2 naira. So how much will the NCI pay? Hello, class. How much will the NCI pay in order for him to be the owner of Omo, co-owner of Omo?
It should be 25%
200,000.
of 100,000 times 2
That will
naira.
now be, let's take that.
200,000.
That will now be, he has 25,000 units in Omo. So yeah, we are saying using Lide Co in Omo Co. So how
50,000.
many units does the NCI has in Omo?
25,000.
And what is the market value of Lide of Omo's share?
2.
So how much will we pay
50,000.
as the NCI?
50,000.
So that is us. So I will say we've been able to achieve this, and I don't want to draw my luck because we are told the class must end by 6:30, and I've done 10 minutes. So I have an assignment for you. I don't know if I can get that assignment to you. Are you there? That assignment is something that is very, very simple. And I know a lot of you get to enjoy the assignment as we move ahead. So what I'm going to do is that I will send the assignment to your WhatsApp group. Is that better?
Yes,
Yes.
sir.
It's okay, sir.
Absolutely.
So what did you say?
I said it's okay, sir.
So I'm going to send the assignment to your WhatsApp group. And what I'll just do is that I will now expect you to give me the answer. Is it PYY?
Please, excuse me, sir.
Yes, are your excuse?
Please, sorry, sir. That link that is sent is disappeared. I can't find it anymore. Please, can you share it on our WhatsApp group, please?
Okay, when I'm through, I'll share the link on your WhatsApp.
Okay, sir. Thank you, sir.
Is that all right? Is there any other question?
Okay, can we ask questions that doesn't
Can you ask question on what?
that doesn't pertain to this class? I was going to ask question on the other class. For those of us that are taking other courses, who have not been attending any Zoom class.
You'll not be attending which classes?
Zoom classes for, okay, like last week now, our PISA class did not hold. And on the timetable, there's no provision for PISA this week again.
Okay, you see, we are actually working on all our other colleagues in order for them to be able to use this platform. And you see, we are in hard times and not the rest. So because to use this platform, to tell you is that we have to be also doing what we call investment in the hardwares. And I'm sure some of you get to see that when I'm talking to you, I'm actually using 2 devices. And those 2 devices have to be on the internet. And on that internet, when we talk about consuming data, so we are trying to also get some of our colleagues, because for the PSAP 2 is somebody that will have to work on the board. So although there are 2 things that we are working on, is that if the PSAP man cannot be on the internet, we that were on the internet, we're actually going to leave the internet for them when they show up. Are you getting that now? Are we there?
Okay.
So I want to just send your assignment to you now. On your WhatsApp, I think there's an assignment already. So I want you to check. I want you to give me the answer. So I think I've done that on your WhatsApp already. Try check. I think there's a question already. I said determine the fair value of the consideration that Malawi has given in buying the investment in that. Determine the goodwill arising. Are we there now? And show the consequence account of that. So I don't want you I want you to just do number 1 for me and forget about the goodwill. Are you there now? However, I haven't thought you guys should be able to also do the goodwill. Because what I'm also doing there, I think I'm going to add one thing to that question, which I don't have. And I want to add it so that I'll be able to enjoy it. So please, I'm adding it to your question. And that which I'm adding to your question is that sorry, I'm chatting you guys on WhatsApp. Hope there's nothing there. What's going on? Who are those people making noise here? So please, I'm adding to that question, and I'm sure you guys will see it. The non-controlling interest, the non-controlling. Please, the mommy should attend to those guys. I hope they are not doing James Bond. The non-controlling interest value should be calculated. So, I think I've gotten that should be calculated. The market value of the subsidiary on the date of acquisition is ₦1.25. So I have added to that question. So I want you to now, so you'll be able to get the goodwill. So any other question for me? Any other question, class?
No, sir.
So if there's no question, can we all say that this has been a fruitful class?